Welcome back. Let's get a market conversation going. Ashi Anand from IME Capital is now with us, and he's here with us in the studio now. Ashi, we always start the discussion with your digital disruptors portfolio. Sure. 25% holding in Zomato. PB Fintech is up 21%. Well, you've got a new entrant, Ola Electric. Does that fit the criteria for digital disruption? Did you analyze it, and what were your thoughts?
So we have analyzed it, right? Okay. And we're actually a little confused on whether it really does fit or not, and I'll explain why. The core element of digital disruption is it's very important that there are very strong competitive barriers to entry. And you want the platforms that we're investing in, we want them to emerge as one of the dominant players. I think you don't yet have that answer when it comes to electric two-wheelers. What market shares are likely to be 3, 5, 7 years down the line? Ola Electric clearly has strengths. They do have a certain right to win. We don't, however, yet know whether that is established enough, and how that, as Hero and Bajaj and TVS get their act together, what eventual market shares are likely to be and what profitability is likely to be. I think that is still uncertain. Okay. And that is the main reason why.
So why not play it for 2 years, 3 years, till competition picks up? Because today Ola is a dominant player.
So the fund is structured as a quasi-private equity fund. Okay. We are looking at playing longer-term disproportionate returns that can get generated. Even as of right now, right, what is pricing going to be, what's profitability going to be in the near term for electric two-wheeler players? It's still very, very nascent stages. We may evaluate taking a small stake in it just to have it in the portfolio. But I think just generally the core element of the digital disruption portfolio is that very clear right to win, becoming a dominant player, being around for the next 5 years and having a profit pool which could be very, very large, which you can really enjoy.
Also at a time when the electric two-wheeler space itself is seeing some demand slowdown, right? So the broadening of the sector is something which is also being questioned right now, the widening of the sector. But I take your point entirely. Do you feel that, given the fact that Ola is discounting heavily even at the moment, right, 25,000-30,000 rupees, it would be a longer journey to profitability, because once they sort of take those discounts out, then perhaps it could be a bigger impact on demand. So I'm just trying to understand, in terms of a timeline, what are you looking at for profitability?
So that is essentially our concern, right? You don't have clarity around that. Okay. And what's happening is that with ICE two-wheelers moving towards EV, your entrenched players, the Bajajs, the Heroes, they cannot let new competition come in and really disrupt. You'd be willing to kind of play off profits, and they have cash flows to allow losses to happen on the EV for a sustained period of time. So we're not very clear how long it is going to take before the space turns profitable. And that is our main concern. We're also okay, as in we were okay investing in a Zomato, investing in a PB Fintech. At a time, they were losing big amounts of money, as in we launched our fund in Feb, when everyone was looking at the hundreds of crores of losses. But what we did have was a clear path to profitability. I'm sure Ola Electric also has it, but the moment we need an industry to stabilize before really taking big bets.
So since you spoke about Zomato, I just want to follow up there. I mean, you have 25% weightage, right, in that stock. And of course, it's done phenomenally well. But for someone
it's been a 5-bagger for us. We recently just crossed 5.
Yeah, and it was a leap of faith for a lot of people, right, because of the trajectory that Zomato has had. But now, if someone's missed out on this rally, is it too late?
We don't think so. So I think, but the main call is the moment you're now investing in a Zomato at 250 plus kind of levels, you need Blinkit to work, right? At about 50, 100, 150, just on the pure food delivery system, there was a tremendous amount of value that we were seeing. However, the moment it becomes at these kind of levels, you are now ascribing about 50% of value plus for Blinkit. And that is a space where competitive dynamics are still to kind of evolve. We clearly believe that Blinkit has very clear rights to win. We've discussed this in the channel as well. So we do expect that to work. But I think the moment it becomes 250, 260, arguably it has become a slightly more tough call. We don't, like, a 5x in the near term is probably extremely unlikely.
Okay. Since we are on the subject of this digital portfolio, any changes that you've made in the last 1 month, post the Q1 numbers? Anything that stands out for you? Any changes that you would recommend to your portfolio?
No, so it's positioned as a private equity fund.
So no changes?
It's really, really stable. I think the main changes we've had to make in the portfolio has happened more because of risk control.
Okay, so because of
Zomato
risk control, have you made changes?
So what happens is Zomato keeps going up above 25%. We have a 25% limit. So then we have to trim and move it towards other places.
Okay.
We've started adopting a bit more of a string of pearls approach. So there are certain companies where we may not be as convinced as of today, but clearly there is some interesting value coming in. So Ola Electric, for example, could be an example. So what we're looking at is possibly having small exposures to some of these companies. So you start tracking them that much closer. They come into the portfolio, and you can possibly increase weights as these companies evolve.
So in your microtrends PMS, right, very interesting names is what you have here. I mean, of course, we've spoken about Zomato. There's also PB Fintech. There is 361, which is really growing right now. In this whole financialization of savings space, there's a lot of companies as well. HDFC Asset Management, HDFC Life. What are the big trends that you notice over the next, say, 1 to 2 years? What stand out for you?
You know, financialization of savings is a decade. As in, I think it's the next 10, 20 years. It's a very clear structural kind of play.
But something like an HDFC Life has been frustrating for investors, right? Over the last 2-3 years has given you absolutely no return. So,
but there were specific reasons, right? So if you look at it, we actually didn't buy HDFC Life until a few months back.
Okay.
There was a very specific tax change that happened, right?
Yeah.
Which fundamentally impacted growth. You had, for a certain period of time, there was going to be a year and a half when nothing was going to happen in this company. We basically waited for that whole base effect to go away. But fundamentally, if you're just looking at financialization of savings as a theme, be it insurance, be it capital, be it AMCs, be it wealth management firms, we're seeing very, very attractive growth here. What we are seeing away from are brokers. We're seeing away from pure demat players because we believe that retail participation in direct equities and especially in F&O has probably run well ahead of itself. You are seeing the regulator coming in and trying to make some changes to try to impact this. So you are seeing some kind of risk in those segments. We're staying away from that. But I think if you're looking at mutual funds, life insurance, all of this looks very comfortable to us.
And one more word on Titan, because it is, stock. I mean, you hold about 2% of Titan in one of your funds. It's facing competitive headwinds. Some of the smaller players are doing better. So why not look at some of these mid-cap companies which are growing faster in the jewelry space?
So just the way Microtrends is positioned, it's positioned as a large and mid-cap portfolio. We believe that we can deliver outperformance to the overall markets by taking concentrated exposures in certain microtrends while staying in the large and mid-cap space.
So why not trend?
So we are evaluating, right? I don't want to get into a specific company, specific thing or whatever, but we are evaluating. We are aware of Titan and the competitive dynamics having changed, etc. That said, we believe Titan remains a very, very strong franchise. There are some near-term headwinds, but we still see a very large headroom for growth, and we believe the market can support a number of players all doing well.
Okay, well, your fund does have a lot of businesses that have been ahead of the curve and are growing in this tech space. So congratulations on that. And thank you so much for coming into our studios today.
Thank you so much for having me.
Thank you. Enjoy Bombay.
Yeah, thanks.
Okay, well, on that note, let's do one thing. Let's take a quick commercial break. On the other side of the break, lots more coming up on the markets, on individual stocks. So don't go anywhere.